The market has moved higher the last couple of sessions, still well off our highs for the year. And the question is now, where do we stand from a valuation perspective with so many unknowns? Bring in Aswath Damodaran of New York University. Aswath, good to chat with you again. Any way to gauge the valuations now of where we are, given that nobody has any idea where the E in price to earnings is going to be in a month or two?
I think the first thing we need to accept is this year is going to be a disaster in terms of earnings for most companies. I mean, it's a given that we're going to see a significant drop in earnings. But I think the real question is not how much will earnings drop in 2020, but how much of that earnings drop will be recovered in the years after. Because if you remember the 2008 crisis, it wasn't just that earnings dropped in 2009. You lost about 20% of those, that lost earnings was gone forever. And that becomes the big question here, because we've never had an experiment like this when we've shut the entire economy down. We have no idea how quickly the engine will rev up when it's restarted. Because the best case scenario is, even if you have an earnings drop this year, that you recover it in the year, in the next 2 or 3 years. If that happens, then I think we're in good shape. If it means that we're going to leave a lot of earnings on the ground that we'll never get back, then I think we're in much more trouble. You're right, though. The uncertainty is huge, but we can't stop trying. I mean, I think that's the essence of valuation. Is you can't stop when there's uncertainty. You've got to give it your best shot.
And we've got Easter and Passover coming up. Let's try to be a little more optimistic given the direness of the news. Aswath, what's the best case scenario for valuations and markets as you see it? Let's try to be a little optimistic.
I am an optimist. In fact, I'm an optimist for the 6 weeks I've been writing my updates. I think that, I think the best case scenario is that when the economy revs up, that we go very quickly back, maybe not to where we were last year, or before the crisis, but close to it, maybe over the next 6 months or a year. If that happens, then I think, you're going to see earnings rebound, and you're going to see a loss in value simply because you can't lose a quarter of revenues. Forget about earnings, an entire quarter of revenues and not feel the pain. So I think the best case scenario is the economy comes back quickly from the break. The worst case scenarios is the damage that's been done, not just to the economy, but to psyches, consumer psyches, business psyches, takes a while to heal.